Hello UK pension subscribers and welcome back to the channel. Today we're going to be discussing the topic of, is taking an annuity with my defined benefit safeguarded assets a good or a bad idea inside my SIPP? Okay, so first of all, to break this down, before we get into trying to understand whether it's a good or a bad idea, let's take a definition of what an annuity actually is. So I'm on the Money Helper website here. We love the guys at Money Helper. They're very good at helping to explain things and keep people safe. So let's look at the definition of what an annuity is. An annuity provides you with a regular guaranteed income in retirement. You combine the annuity with some or all of your pension pot. It pays income either for life or for an agreed number of years. When you use money from your pension pot to buy an annuity, you can take up to a quarter, 25% of the amount as a tax-free cash. You can then use that to buy the rest of the annuity and get income you get taxed as earnings. Annuities are sold by insurance companies. Okay, so to break this down, effectively, we get a lot of inquiries, or some inquiries of people saying, okay, so Cameron James, I would like to use you for considering exploring my defined benefit pension transfer options by utilizing the PTS that you recommend for us. But for me, it's a little bit like, well, hang on a minute. You want to move away from a safeguarded defined benefit asset to go into, for example, a SIPP, which is in 95% of the time the most suitable solution. And then inside that SIPP, you then want to go to another private insurance company. No insurance companies work for free. No one does anything for free in financial services. And you want to buy an annuity from them. And the client's like, yes, that's exactly what I want to do. And I'm like, but you do realize inside your defined benefit safeguarded asset, you will get a pension income for life from age typically 60 or 65. Now, they don't necessarily call it an annuity, but it's a pension scheme income. There's no difference between that pension scheme income and effectively taking yourself outside of the pension pot, going into a SIPP and then buying an annuity. In fact, inside a defined benefit scheme, obviously you know you have indexation with, for example, inflation, IPI, CPI, whatever your scheme in particular uses. So the idea of moving away from your safeguarded asset, taking that level of risk, investment risk, all the risk is on you inside a SIPP, to then go and invest it inside an annuity and paying another insurance firm to offer you an annuity and the terms that you get with that, for me, it's kind of a bit counterproductive. And a lot of those instances, I would say that by definition, a client who is saying, I want to purchase an annuity inside my SIPP is coming out as a cautious risk profile. So then really the question is not, should I be using an annuity in my SIPP? For me, the question that I would ask the client before even putting them forward to a pension transfer specialist would be, well, hang on a minute, why are you even considering to do this? Why wouldn't you keep your safeguarded income from life from your DB scheme and not even bother with a SIPP or an annuity? Now, for those clients who are saying, yeah, but I want to have the flexibility, I want to have the freedom, maybe I want to have a full 25% tax-free cash by completing a transfer to a SIPP. As you'll know from my previous videos, inside a defined benefit pension, the PCLS that you will get from the scheme is never 25%. It can be anywhere between 10 to 21, 22% on average. So someone might say, I want to do that, but with the remaining money, I, as a financial advisor, by first point of call, would always recommend a client to invest their money, the remainder of the money, 75%, in line with their attitude to risk, their risk profile. That's why we have a risk profile. A client who's effectively saying, I want an annuity, is almost by default saying, I'm on the lower end of the spectrum in terms of risk. I don't want to take any market volatility or risk. I want a defined, set income for life from my SIPP, and I don't want to worry about it. So back to point one, why would you even transfer in the first place then? So if you're watching this and you're thinking, well, I don't know, I want to have a conversation about this, I want to understand annuities, defined benefits and SIPPs in more detail, head to the description section below, book yourself in via the calendar to have a conversation with myself or one of our senior financial advisors. So that would be my take on it, guys. Let me know if you think I'm wrong or people have the right to go in SIPP, which you do, and to pick an annuity. But let me know your thoughts and comments below as to why you may want to do this, as opposed to just keeping your defined benefit scheme in the first place. And guys, as always, please hit the like and subscribe button below. This helps the channel to grow and lets YouTube know that we're more relevant for more and more people like yourself. Thank you very much, guys, and speak soon.